Pound dollar daily forecast, February 9th, fxempire.com. The pound dollar pair fell during the Wednesday session as the dollar got a bit of relief from the massive selling it's seen over the last couple sessions. The Europeans still have not come together with some kind of agreement concerning the Greek debt crisis. The markets may have already priced an agreement in, and any failure would certainly bring the risk related pairs down, like the cable. The 159 level above did prove to be resistive as we suggested in yesterday's video based upon this cluster up here, and we did get a pullback to the obviously supportive 158 level. The market still looks bullish overall, and the idea of some type of consolidation in this area really isn't a real stretch of the imagination as it has risen so quickly and by so much in such a short amount of time. However, since the UK is tied to the European issues, there's a very good chance that any failure to come together in Europe with this crisis solution will send this pair plummeting, as the world will almost undoubtedly run back to the US dollar. The UK's numbers have been, economic numbers that is, have been quite a bit stronger recently, and as long as the EU doesn't implode, it's possible that the markets believe the pound may have been oversold recently. The move has been very parabolic recently, though, and as such, we feel it's hard to get in on the long side at these lofty areas. What we'd like to see is some type of pullback, perhaps about 157 or so, in order to go long, as it would show a break above the consolidation, a pullback, and some continuation. As far as selling this market, we really don't have any interest until we get sub 157, and at that point in time we'd also have to assess the situation as to what was going on. Obviously, if there's a failure in Europe, then it becomes a much more pressing issue to buy the dollar than it would be, say, just on the general malaise as we wait for some type of solution out of Athens. In order to buy, though, with everything that's going on, we want to see a breaking of the 160 level, as it is a huge, large psychological number, and as such, it should cause some type of reaction. So in the meantime, we're in a little bit of a pickle here, as it's difficult to buy at this level. It's just gone too far, but it's also difficult to sell, as it just hasn't pulled back, and it has shown extreme strength at this point.